Right then, I think that's us started. Hello, everybody. Thanks for being on today's session. So hopefully you're fine and well. Um, this is all a bit kind of new for me, really. We've done lots of webinars on GoToWebinar and so on before, but I'm also casting this on YouTube and Facebook Live. So hopefully it's all coming through loud and clear for everybody else as well. Thanks for being online today. This is Adrian Buthee speaking. I'm the head of trading here at Trendsignal. And what I'm going to do today is take you through the top trades are setting up as we speak. So the whole purpose of these webinars is to really give you I guess a bit of a taster. If you're not yet a member, give it a bit of a taster of what the sort of the day-to-day routine is. If you are a Trendsignal member, and if you are a Trendsignal member, just to help give you a little bit of extra color, a little bit of extra support and training, and so on. So, look, this is live. The whole reason for doing it live is so that you can interact, you can ask questions. Got any questions, fire them through, and then we can go on from there. So, quick question. Let's just go with it. Ebenezer here. Is the percentage account value what we are willing to lose, or how much to trade? Percentage of account value is really what you're willing to lose or prepared to lose a trade. So if you're happy to risk 1% on a trade, then that's the number. So notwithstanding any slippage or anything drastic that might happen, it's typically what you would be risking of your account, what proportion of your account you'd be risking on that particular trade. But look, if you can hear me, let me know. Just let me know if the sound's coming through. That'd be fantastic. And then I can bring my charts straight in there. Now, quick question before we really get into it. I'm going to be looking today at the 3 different swing trading systems that we provide here at Trendsignal. We've got Trendsignal Plus, which is FX, indices, commodities. We've got Momentum Stocks, which is for, well, stocks. And then the Complete Crypto Trader, which is, well, for cryptos. Guys, let me know what you're interested in. Let me know in the questions box. Is it Forex? Is it stocks? Is it cryptos, indices? Just let me know, please, in the questions box. If you're not sure, or type not sure. If it's everything, type everything. Whatever it is, just give me a good idea. AJ, just everything, basically, which is okay. Judy, Forex mainly. Forex indices, Forex cryptos, everything, says Stephen. Good. All right. Well, let's get on. Hopefully we'll be about half an hour or so on this session. So let me just bring my charts in and then we'll get going. I feel like starting with stocks today. It's my background is stocks. So I'm going to do that. I'm going to bring my charts in and we'll go with that. And then we'll move around the other bits as we go. So we'll start with momentum stocks. Now, who here attended last week? Did you attend last week? So I did the first one of these live today's top trades events last Tuesday. We went through plenty of opportunities. So did you attend last week? Just yes or no. Yeah, a few of you did. Okay, good. So what we're going to do is take a quick look at the momentum stock system. So the purpose of this is we'll look at the trades that are setting up, and what we'll also do is have a look at the ones that we talked about last week. So what I don't want to do is spend hours and hours and hours regurgitating all the trades that were in between, because it just takes forever. But let's just have a look at today's trades, last Tuesday's trades, and just so you know, I do intend anything that we're calling live, calling today, I will be doing a review video that we'll post on the website, we'll post on YouTube, Facebook later on in the week. Okay, so let's crack on then with the scan. What I've got here for the scanner, so TradeMate is predominantly looking at US stocks. The momentum sniper is what we can look at, and I've got the list of the Dow 30 stocks here. I already know that there's no Dow 30 stocks that are signaling today, so I'm just going to widen it out a little bit to have a look at the S&P 500, because nobody wants to attend a live webinar and see that there's nothing to be done. So let's have a look at that. Let's have a look over the last 2 bars, hit search, and what we've got there is a few markets that are there. So effectively what this means, because the US stock market is closed right now, RTX, which is Raytheon technology, that set up last night, okay, because the market's closed right now, and T, which is AT&T, was also set up last night, and then COP, which opened, was a new trade on Friday. We'll have a look at that in a second as well. Okay. God, I've paused my screen. What am I doing? So hopefully you can see that now, Dennis. Thank you for that. So these are the momentum stocks opportunities. Let's get straight into the ones that set up last night. And this is with a view to placing them last night if you got the system, or maybe on the open today. So we'll start off with Raytheon, and you can see the opportunities there. Now, what I generally like to do, everybody, is when you see a chart, yes, you've got the snipers on there, and you just take a nice quick objective view of what are we seeing on here. Now, straight away, I can see that this market is rotating quite nicely. It's posting some quite nice smooth moves. It's not choppy. It's nice and smooth. And the way I look at it as to whether it's smooth or not is basically looking at this line. Are we getting nice smooth rotations of red to green? The more jerky it is, probably in my opinion, the less confident I would be to take the trade. But when you're seeing nice smoother moves, not only that, but you're seeing this market sort of ratcheting its way higher with sort of higher highs and higher lows. That's a very classic uptrending pattern as well. I like seeing that. So when I look at this, it actually fills me with confidence right out of the gate. The weekly chart is weekly trend is positive. The monthly trend is positive, hence the arrows there. You can see that with the WT and MT. Those annotations are basically whatever the trend is at that time. So whenever this line changes color, it's basically giving us a little annotation on the chart to say what is the context. So this is a turn higher, i.e. indicators going from red to green, that are supported by an ascending weekly trend, an ascending monthly trend, but also an ascending chart pattern as well. And there's various other things that we're looking at on the chart to determine the sniper discs. But basically, there's quite a lot to like about this one. I quite like it. Now, in terms of the opportunity, sometimes it's a good idea to have a little bit of a look back, see where the markets come from, see if there's any sort of support or resistance around that might play a part in their massive sell-off on Raytheon back from really the coronavirus, the pandemic at the start there. But I don't really see anything that would prevent this market from going nicely higher. So I'm happy enough with that. Let's think about stop losses and targets for this opportunity. Now, this is my own view. This is an educational webinar. Any risks any trades you take, this is not advice. This is educational. Any trades you take, they're at your own risk. Okay. So we're not an advisory broker. We're not regulated by the FSA because we are an educator. We provide people with systems and so on. So then we teach people how to trade them. So there's the potential buy. It meets the rules of what we call a sniper trade. Now, in terms of managing that trade, well, let me just mark out that entry. That was from last night's close. There's a couple of things that we're going to look for. Number one is that in terms of targets, there's a couple of great go-to targets with this. The kind of the sweet spot for US stocks with this system is sort of 3 to 5%. Now you can get into the detail of it and you can look at support and resistance if you want to. But if you're brand new to using any of our systems, you're typically provided what we call starter limits. So a target type that you can get going with straight away. Okay, and for me, it's anywhere in between that range. You get a particularly good success rate on those. It's around about sort of 65%, I think, hitting that 3%, and around 51% hitting that 5% objective over the last sort of 4 or 5 years. That's looking at the Dow 30 stock. So some really good opportunity, particularly since the stop losses are quite a bit narrower than those objectives as well. So a 5% target, this is broadly speaking trading at $100 a share. So a 5% target would be up to 105, give or take. Okay, for me, I think that's a touch high. What I would be looking for taking this opportunity is where the market's found a little bit of resistance before. So yes, you can go for a bit, but actually the index has already done quite a bit of a move. So I'll be looking at where the market's found a little bit of rejection here. Okay. And I'll be looking at that as a good area of resistance in order to for my target. So around that sort of 102.80 level where we found resistance here, 28th of February, 1st of March, and then also on the 7th of March as well. So nice enough objective of a roundabout just shy of 3% there. As for the stop loss, quite a decent bit of separation. This is on the momentum stock system, so you need that particular system, Ebenezer, which you may not have. So this is a particular system for it. So we have a crypto system, we have a predominantly Forex system, and then we have a stock system. So the purpose of today, Ebenezer, is to really just put everything out there. And then, because what we generally find is people like to trade a certain type of asset class. Some people like Forex, some people like stocks, some people like cryptos, and the way in which they move is slightly different. So the strategies, Ebenezer, are specific to those individual markets. Okay. As for the stop loss, quite a good separation from this buy. It's a good positive entry candlestick. So I'm going to use my aggressive stop loss, which is on this line here, this red to green. On that intersection, we can actually look over here, this vector average price. That's where the stop loss would be, in my opinion, based on the system and the way in which this market typically moves. Okay, so, nice enough reward to risk on that one. It's about a one-to-one trade, and we'll see how it goes. There you go. Can't be much clearer than that. Let's have a look through at AT&T, so I can have a quick look at that as well. For me, what you've got here is a stark contrast, really. Let's just quickly go back to RTX, and you're seeing a market there that is. It's just, look at these smooth rotations. It's just nice, beautiful moves. This is exactly what we're looking at. Okay. What about the spread? A lot of these stocks have very little to no spread, really, to be honest with you, particularly if you're trading with the right type of broker, Gary. So AT&T, my stark contrast, yes, that was rotating relatively well, but if you actually have a look at it more recently here, it's a lot choppier. If anything, this market is more breaking to the downside. This is making those buy trades a little bit riskier. And you know what I quite like? And whilst I'm seeing here, the market's had a low here. It's got a low here, which is a higher low. So that's positive. There isn't much else that's positive about this opportunity. So for me, this is very much a riskier play. And the reason for that is you've got a down, intermediate trend is down. You've got a downtrend on the weekly, downtrend on the monthly. There's a lot that's pushing this price to lower prices. And probably one of the most important things that really, I'm quite happy to take trades otherwise. Okay, I don't mind a lot of opportunities, but there's very little that's that positive, because even this entry bar, all we're really seeing is rejection of, look, the market hasn't closed above, well, here convincingly for about 2 weeks. Anytime it's tried to go above that level, it's got whacked back down again. Even tried it quite aggressively on this day here, didn't it? Got whacked straight back down again. So again, here, and then on yesterday, so what was that, the 21st, it's just not liking it up there, quite frankly. So unless we can really see it, I'd almost rather buy it at the end of today if it can close above this 23.50 level, because at least I'm buying some strength. At the moment, all I'm seeing is I'm buying into weakness. So for me, whilst it's a sniper disc and whilst it's okay, I'm more likely to see something like this, a little limp higher, followed by probably more likely at this point to see a move to new lows. And for me, I don't really see anything that can tell me otherwise. And do you know what it is? When you're risking your own capital on these trades, there's no point doing it idly, willy-nilly. It's about making sure that you're placing the trades in the right way for the right reasons. And whilst our new members might just be happy enough to go straight into that, and that's fine. There's nothing necessarily wrong per se with this trade. It's just that once you understand a little bit more about the markets, you might think, do you know what? That looks a little bit riskier. It's not. I'm not as confident about this trade as another one, perhaps, and therefore might be better to avoid. Okay. James, I don't know. Okay, you're gonna have to email me on that if you don't mind. Really, it's only ever been on crypto though, to be honest. But anyway, unless something weird's happened. But anyway, let's move on. So otherwise, COP, ConocoPhillips. This is a trade from the 18th, Friday. So I'm getting a little distracted. Just bear with me 2 seconds. The beauty of a live session, isn't it? Bear with me. Okay, so we had a buy here. This is kind of a bit similar to the Raytheon one, isn't it, in a way? But ConocoPhillips there, COP Really nice buying opportunity. And this is kind of a little bit like the Raytheon one in a way. Again, you're seeing a market which is just flowing much more nicely. It just gives you so much more confidence. And what you can actually see there is a market that's already really done a good chunk of that move. As per, it's almost like it's a day ahead of the Raytheon and the RTX symbols. You see what I mean? Guys, let me know. Just make sure we're all okay with it. Do you get the distinction between them? You can see the difference between them from a nice free-flowing move. Because if it's free-flowing, you're likely to get a bit of oomph behind it. If it's choppy, if it's indecisive, what you're effectively seeing there is greater turmoil between buyers and sellers. And when there's no clear trend, when there's greater turmoil between buyers and sellers, you end up with a much choppier kind of move. It's more like that rather than like that. You end up with, because what happens with the markets is the reason you get turning points is because that's when you get conflict between buyers and sellers. When it's nice and smooth, it means just the buyers are in control. Then it means the sellers are in control. And then there's greater conflict as the market turns. And then whoever wins the tug of war, that's the way the market then moves. With AT&T, it just looks like there's greater conflict at this point. So I'd rather just wait for that conflict to dissipate, and then we can start to move on. Okay. So look, that's the stocks. Let's have a quick look at the ones that we talked about last week. So last week's opportunities that triggered on Monday were American Express and Visa. Do you remember those? So let's have a quick look at American Express. That was the buying opportunity there, and we were looking at it on the morning of, or lunchtime of the 15th before the market opened. Fantastic trade, moving back up to sort of past resistance levels. And again, you're seeing once again a more smoother moving market, nice clear rotations. So no real surprise that the market then went on and had a nice bit of oomph, a bit of momentum behind it, carrying it forward. As we discussed in the session, we're looking for a 5% objective, nice simple go-to objective on these US stocks, and it's gone way past that. In fact, American Express has gone just over 10% up to its highs. For me personally, I don't mind that. I'm happy to go for a certain target, and then move on, because then I can allocate my margin to other opportunities. I tend to like to go for what the market's most likely to do, rather than looking at what the market's least likely to do. So that's American Express, and then the other one was Visa. That was a new opportunity then as well. Again, a little free flowing there, and a buying opportunity on the 14th, which we're entering on the open or on the Monday's close, and a nice buying opportunity from there. So you can see again this one going from $200 a share to 219, which is about a 9.5% move, more than 5%, which is the objective, the target that we discussed in Tuesday's session. I hope some of you managed to get onto some of those. If you did, please do let me know. That's stocks. Let's move on. Let's have a look at Forex. And by the way, we're not in earnings season at the moment, so we don't have to worry too much about corporate results until we move into sort of mid-April, really. Let's just get on to foreign exchange. We'll have a look at the D1 Sniper. There, and let's have a look at the opportunities that are setting up. Now, there's not a lot to go through on the Forex side of this world, so let's have a look at what we've got. Let's bring my scans in, and I'm going to look at the D1 Sniper strategy to begin with. Hit search, okay, and that's going to give me Euro Swiss, which is setting up as a new opportunity for tonight. Now, what are we seeing on this here? Euro Swiss, not one of the most popular, not one of the fastest moving currency pairs, but it's setting up relatively nicely at this point. Again, relatively free flowing, and it's looking at a selling opportunity for tonight from there. So what does that mean for that opportunity? Well, the one thing I'd point out at this point is that it's looking okay. As I said, it's free flowing. You're seeing the market returning to what was support, finding a little bit of resistance up there, and then rotating back down. Quite like this as an opportunity in terms of setting up the trade. We can refer to TradeMate for the sort of the go-to stop losses and targets. Stop loss wise, I'd be inclined to use the aggressive stop on that change there. It's above the last couple of days high, so we can select the aggressive stop. We'll go for the D1 Sniper strategy starter limits. So this is what typically our new members would go with, and then the target of 102.40. So it's about a 40-point stop target, sorry, looking for that opportunity there. We'll see how this goes over the next couple of days. But one thing I would say about that, everybody, is that these opportunities are not yet set. So there are a couple that we looked at last week. So last Tuesday lunchtime session, these opportunities will not be set until at this point around 9 o'clock tonight. So putting those opportunities on around 8, half 8, that's generally fine. You know, there's not too much of a tracking issue between those. But getting them on around half 12, we want to be looking a little bit later on to make sure that the strategy is still in place. And the reason for that is this candlestick here is still being drawn, right? Because it's still today, and it's not today until 5 p.m. Eastern time. Okay, so whilst the market is the day is still being plotted and prices are still moving, the indicators associated with that day are also still being plotted. The candlestick patterns, chart patterns, everything associated with today is still subject to change. So we're not placing the trade now at 12:30. The US stocks are okay because it closed last night. That was okay. But this is a live bar. We'll be looking at this later to see if it's an opportunity from there. At this point, I'm kind of okay with it. You know, stop loss 103.35, objective around that 102.40 level. If you're looking for something a bit punchier as an objective, if you really like this opportunity, we can look back to the pivot point and where the market last was down at those levels. What was the structural level from which we found support? We can use that pivot point from there, which is around that 1003, 1033s. Level there, so that pivot point down there. So we shall see. AJ, you did Visa and American Express, fantastic. Well, I'm good, I'm pleased. You know, you've missed out on quite a lot of other good trades, though. Potentially, there was plenty of other good ones, but I'm glad you got on them, AJ. That's fantastic. Right, so that's Euro Swiss. Quite happy with it. That's the only one setting up for tonight. So what I'm going to quickly do is have a look at this one, the D1 Sniper Vector Average Change. Let me explain what that means. So this is basically looking at just simply this line changing color. Whenever this line changes color here, this one that's red and green line here, that's basically a turning point taking place. Now the snipers come into play by the algorithms then analyzing the context of that change in direction. So the change in direction is simply, has this line, the vector average line, change color? If it has, then it will come up on this scan, okay? If the context of that change is such that it's a winning, it's a pattern. The context of the pattern is that it's got a consistently high performing output, then a sniper disc will appear as well. So we can use the different scan, i.e. the D1 Sniper strategy there, or the D1 Sniper VA, just to look for the color changes. All right, so that can give us further opportunities if we want to. Now I quite like looking at those, but you know, I like looking at a little bit of additional context. So when you're brand new to Trendsignal Plus program this is, typically you'll start just looking at snipers and then you can develop into looking at those additional opportunities. For example, we've already looked at Euro Swiss, there's no point looking at that again. Euro Sterling, and the reason I want to show you is to look at this particular opportunity and why this is quite attractive and quite interesting. Now, again, this is like a development thing. This is where you can progress too. But what I really like about this is the vector average change was last night. Okay, that was here. So on the close of that candlestick, and that's because this line here is changed from green to red. So that's giving us a potential sell trade. Now there's no sniper because things like the intermediate trend, the downward, the descending chart patterns, the degree to which markets are overbought or oversold, and so on, that's not right. That's not in place. We do have a descending monthly trend and we do have a descending weekly trend, but that in itself, without any other context, has not historically produced a significant, a consistently profitable result. Okay, it's a little bit erratic. It might be slightly up overall, but when you've added in and factored in all your costs and so on, it's not that great a setup. So that doesn't mean there aren't great trades though. What it means is we just need to use the naked eye a little bit to determine, well, okay, we have got a turn here, but is there anything on here that could make this more attractive to us? Is there anything on this chart that makes me think, do you know what? I know it's not got the best chance of success, but actually I really like it because of X reason or Y reason. What would that reason be? Any ideas? Well, it could be previous level of resistance. So what happened? Where's this market come from? Let me just clear off all my scribblings. Where has this market come from? Well, it went up here, found resistance here, and then came off. Pretty classic, really. And look at the dotted line here. This is where the market found resistance before, 84.57. That's the key level from which this market rejected the highs back in early February. The market then put in quite a big downward move. So not only did it find resistance, it led to quite a big rejection off that level. That's really important because as the market then gets sucked up to that level, it's the reaction off that level that is really interesting. I'm not going to sell it just because the market gets to 84.57. I'm going to sell it because the market found a reaction off 84.57. And what this does, it gives us a very clear, the high there, look, 84.57, you see the high for the candlestick. It hits that level, stops it, right? It's like a whack-a-mole. It's like whacks it back down, and then the price is, there's no buyers left up here. You know, the buyers have been hit with huge selling pressure. The sellers take control, price drives lower. That then leads to a downturn in prices. The context for this downturn is such that actually you have that extra element, that extra reason to take this short trade. And it's a nice looking opportunity. And it's nice all day long because the turning point gives us the repeatable entry point, if you like, but the context of the resistance helps us to say, well, why would it come off from here? Yes, it's coming off, but why would it come off more from here? Oh, that's why. And it's really easy to spot. Yes, if you're brand new to the systems, just go with the snipers, it's fine. But once you understand a little bit more, you can take it to that next level. And actually, as far as those objectives go, again, really nice sell. You can take that. The market's really done what we needed it to do in the first day. But what you can do here, if you decide to take the trade, you can go off a simple TradeMate tool here and just go with calculate trade details here. We can go with the aggressive stop. Really nice, really weak candlestick. So putting a stop loss around that sort of 84.09 level, 83.63 for the entry. Objective there, it's not going to bear with me. We're looking for around about a 40 to 50 point move for Euro Sterling, and it does it. And actually, what's even more compelling, it's even more attractive to this, without getting horribly confusing, 83.21, 83.18, 83.29, these sort of cluster of green lines here, that's where the market's hit. And oh look, the market's finding support off it as well. So the market's actually hit that cluster of green levels there. It's a very attractive target. I know I'm getting a little bit more technical and I also often want to steer away, but sometimes I can't help myself. But, you know, just a simple 40-point target would have been fine. But what the market's actually done is it's retreated to where the market has found support in the past. Key levels are plotted on the chart. The market has been sucked towards that level and it stopped it. And then the market's finding a little bit of, it might scythe straight through it over the rest of the day and so on, but for now it's finding a little bit of support, and after a day we've hit the objective there. Does this all make sense, everybody? Can you start to see the sort of context for that move? Just give us a quick yes or a no. Let's make sure we're all in agreement and I'm not sort of baffling everybody. Hopefully I'm not. Hopefully we're okay. You never really know, you know. You've got you know, a mix of brand new traders in here, I'm quite sure, and some people are a lot more experienced. But and unless anybody types something in, you don't know if anyone's still awake. Okay. What else have we got there? Crude oil, not a great pattern. Personally, that was in the scan there. I feel that this is a riskier play. You know, when I talk about these sessions, you know, and I'm talking to a lot of newer traders in here, would I recommend us wading into oil now, given the conflict? I think when the conflict started, oh my God, what a fantastic buy that was. Now that we're getting the reactions, and this is all based on what might happen at any given point based on how the conflict goes. This is suddenly a little bit, you know, I don't know, it's become less technical, it's become more fundamental on oil, so I would rather avoid it, to be honest with you. In addition, looking at dollar Swiss was another one that that rotated yesterday. I quite like this one. And this is an opportunity from yesterday. We were on side by a few ticks, nearly took out the aggressive stop loss actually, but didn't quite make it. But what do I like about this one? Some of you might be able to see by looking at your charts. But what's quite interesting here is that you've got a nice level of resistance. Let's tighten up the chart. What happened the last time we were up at that sort of 94.50 level? Why should the market fall from here? There's no sniper disc, right? So why would it be attractive? Ooh, okay. So the last time the market hit up at this level was back in April 2021. Okay. The market put in a move and it put in a price, 94.38. That's the key price from which the market found resistance and sold off significantly, by the way, back in April last year. It's even hitting another level back from there as well. You can even see that the market's hitting another level from when it hit it there too. From there, back in July 2020, the market found resistance there. It's like we're going back to these levels. This seems to be a very strong structural level in that 94.40 area for the US dollar against the Swiss franc. What are we seeing now? Well, let's just zoom in a little bit. There's your 94.40 here. The market's had another look. What we're looking for here, if I'd have seen a close above 94.40, so a nice green bar above there, I'd be expecting prices to rise, okay? And we wouldn't have had the sell trade anyway, right? Because prices would have carried on higher. But what you're looking for is the reaction off those levels. So if you're prepared to spend a bit of time on it, what you can do is actually find more opportunities. So effectively what this is saying is off that 94.40 level, it's hit it, it's found rejection. Again, think of that game Whack-A-Mole. You know the game in the arcade where there's a little mole, there's about 6 or 7 holes, little mole sticks his head up and you whack it with a mole. It's like back down. The market's tried to go higher, it can't. There's no buyers up there. It's met by big sellers. Maybe there's some institutional seller of dollars, buyer of Swiss francs, whatever it is, and he's driving price down. That has then led to a sell trade here, and we're up a slump small on the trade. We'll be looking for around 30 or 40 points. For me, that cluster of red pivots down there is the ultimate objective around that 92.55 level. Quite like it. We'll see where it goes. But again, it's just building context. Yes, you can just take the simple snipers. That's fine, but in terms of that, well, what next? It's a bit like when you're playing golf, which is what I do. That when you first start playing golf, you just hack and slash down the fairway and so on. But then it's all about, okay, well, how can I get a better score? How can I become a 15 handicapper? And then it's how can I become a single figure handicapper? And how can I play fewer bad shots? How can I get around my round without losing a golf ball? It's that kind of thing. It's the same mentality. It's just about whether you don't have to go down that route. You can make decent money enough being, playing off 15 as it were. But it's just about if you want to take it to the next stage, you can do, and it isn't actually all that complicated to do. Okay, that's foreign exchange. Last week, we talked about a few opportunities which were setting up, actually. And there's some really nice moves last week. Let's have a quick look at those. Last Tuesday, wasn't it? Last Tuesday, 12:30, we had the FTSE. This triggered on Monday night. And when we looked at the FTSE, the price was about here. We're about 20 or 30 pips offside at that point. Market's then gone on great guns. We were looking for a 72 pip objective. Why 72 pips? It was just like the go-to target. It was also heading back up towards this sort of congestion area here. So sort of expecting the market to find some resistance at around that area. So it was a nice winner, a nice profit ultimately for us. We also looked at the Nikkei, and you can go back. The recording's up on YouTube. So if you want to have a look on YouTube, you can see it just to make sure I'm not making it all up. Let me just bring in, actually bear with me a second. The Nikkei, we wanted to look at that as well. Now the Nikkei was really interesting. Anyone who was attending last week hopefully got on this and hopefully will remember what I said. We were at the time, prices was about here, and it was just limping over the vector average. Okay, that's good. I'm pleased it's working on YouTube. Thank you, James. You try it for the first time, and you have no idea whether it's actually working or not. But that's good. Okay. Now, what I was concerned about with the Nikkei was this rejection here. The market was sort of limping into a buy trade, and my words last week were, I need to see a convincing buy. I want to buy at higher prices, because if it means that, if I'm buying with a nice positive green candlestick, ultimately what it means is that I'm buying a market that's showing strength. But more importantly, I'm buying a market that isn't showing weakness. Candlesticks like these three here, they've got those long wicks. Effectively, as the day has continued, the sellers have taken control, driving price lower. Okay, so effectively, buyers get up in the morning, oh, they're really positive, and then as the day carries on, it just keeps getting sold off again. Largely because, oh, there's lots of sellers up at those levels. They think that's good value to sell because they're worried about stocks, they're worried about Ukraine and contagion and so on. But then you start to think, well, oh gosh, actually, look at this candlestick here. It's actually closed up there. What does that mean? Well, it could mean that anyone who was selling on these preceding 3 days, maybe they've sold all they wanted to sell. Maybe there's nothing left to sell. Maybe there's no more sellers up at these levels. And if there aren't any sellers up at those levels, what have the buyers got to do? They've got to pay higher and higher prices in order to buy their Nikkei. Okay, because in order to buy, you need a seller to be on the other side, but people don't want to sell down here anymore. They want to sell at higher prices, and buyers have to find those prices, which is what drives prices higher. So ultimately, the sellers that were holding prices over those 3 days, they've probably filled their orders. They're good. They've done it. They've sold what they wanted to sell. But now you're left with a void. And that's one of the reasons why, as you see the market then break, it then breaks quite explosively in a really nice buy trade there. Now, it actually really sort of overshot really in many ways, but that was a good 386 point winner on the Nikkei using the D1 sniper strategy. The Dow was similar, actually, that you can see here. We had a very similar situation where the wicks here were sort of holding prices, and the price at the time on the 15th of March was about here, but a really nice convincing close, closing towards its highs and going on nicely. That would end up being a 250 point winner, or 251, whatever it was. It was nice. Good trade, textbook, absolutely. And the other one that we looked at last week was euro dollar, which I'd like to go through. No sniper on this one. Let's think about why this was an opportunity at the time. So I did a recap on it didn't actually trigger in the end, but it did the following day. So we were looking at it on the 15th, didn't actually give a buy trigger in the end. And that's because prices ended up coming all the way back down again. More of that rejection. And because prices came back down, the signal was still live. It wasn't confirmed until the close, but it wasn't confirmed until the close on Wednesday, the 16th. That's when the market turned higher. Why was this interesting? It was interesting because the bounce we're seeing off the monthly chart. We're seeing quite a significant area of support. Again, I'm getting super technical here, but we called this live ultimately, so it's not a problem. So there, we bounced off that major level of support from the monthly. You can see it hopefully here. Let me just bring my pen in. That's the line. Okay, hit that number, 108.82. That's the key number. The market hit that number. Okay, led to a rally, gave us a buy, gave us about 100 pip rally, and it was a nice winning trade, moving back up to this sort of congestion area and a decent profit for us. Actually really nice trading opportunity. So I don't know if anyone took that in the end, but hopefully we're starting to build a deeper understanding of the markets. That's it on the foreign exchange side. Anyone take any of those from last week? Did anyone look at the Nikkei? Did you look at the Dow to see if there's any action to be taken out of those as the day progressed? Really interested to know how you guys got on really with that. And then finally, we're going to take a quick look at cryptos. Now, give me 2 seconds while I just bring in the crypto feed and the crypto layout. Now, cryptos. What were we looking at last week? There were a few opportunities last week that we're looking at. Now, remember, these cryptos looking 7 days a week, right? So we're looking a bit further back to get to last Tuesday, which was here, the 15th of March. Now, we called this short on Dash. Didn't quite get to our objective. We did an update video, and it was looking better, but it didn't make it to our objective. Reversed. Got stopped out, and then we had a buying opportunity on the back of that. And again, again, you can start to see how the market just holding that level. There was the entry point. It's buying above resistance. It's buying beyond the point where the market was struggling before that went on and had a really nice winning trade. It was about a 7% winner, and you can use that TradeMate tool. There on the buy, it was a good trading opportunity there up to 108.15. Okay, so in from what 102.75 or whatever, and it was a nice buy trade. You know, anyone can trade that. You know, on a buy, pretty much any broker these days. Let's see what else we looked at. We also looked at opportunities on Tron, TRX, which was a buy here. Choppy. Didn't particularly like it, to be honest with you, but it went on hit objective anyway. What do I know, right? It still did it, which is good news because I'm sure a lot of our new members would have taken it anyway. So it's nice to see a profit there. And the other one was Monero XMR, which was a buying opportunity from here. That went on and hit that objective as well. If we quickly use TradeMate to see where we were looking for. We're looking for 195.81. So long from 183 up to 195.81. So the market's about there now, 197, isn't it? So, you know, from 183, that's a rally of about 6% is what we were looking for on the opportunity, and a nice buy trade. There's also been some additional other ones over the last few days. You know, if I look at the likes of Cardano, really nice buying opportunity there. There's been some great trades on the cryptos actually over the last week or so. Now the buy trades are typically easier for a lot of traders to get onto because you don't need a CFD account to trade on the buy trades. You can trade them just with your normal crypto exchange type account. But that's Cardano. You've got Bitcoin. Really lovely buying opportunity again. That's up about a couple of $1,000. From there, we saw Dash earlier, Doge. I'll go through these quite quickly, to be honest with you. Don't need to spend too long. DOGE, that's rallied about 10% after the buy. EOS, fantastic buy trade, really nice. Again, strong candle, taking out that area of resistance. And look, probably overextending where one might expect. I'd be looking for resistance around that sort of 225 level. It's found it a little bit there, but it's just gone wanging through that, but that's okay. The markets will overextend from time to time. And then MKR, equally giving us a buy. There was actually quite a few more. What's interesting about MKR, and the reason I'd like to finish on this one, is you can see that resistance there, hitting it there. Market struggling to break through. Good area for an objective. The objective was about here anyway, so it was just slightly on the inside of that level. But again, the market finding these markets have memories. Okay, now the sniper disc will identify some great trades, but to go beyond that to help you to pick up more consistent results, just have a look, understand the context, look at where this market's coming from, and it absolutely will give you that guidance that you need. It's all there. All right, so that's pretty much it really from me. There's no new trades on cryptos, I'm afraid to say, largely because the markets are all in this sort of buy streak. So there's nothing for me to call today, I'm afraid to say. So we'll just have to see where we are. And it'll be like that. Sometimes I'm going to do these Tuesday sessions, or any day, anyone using the system. There'll be days when there are trades. There could be days when there are no trades. That's just the luck of the draw. But either way, every Tuesday I'll find something to talk about and to bore you to tears over. And hopefully it'll be good value. Guys, if you enjoyed today, let me know. If you found it useful, please do let me know. And if you're not yet a member of of Trendsignal, and you'd like to know a little bit more about us, then just get in touch. Why not? I've put some details on the screen there. So if you'd like to speak to one of the team, there's the phone number. You can pop an email in. You can have a chat with one of the team. They could even do a little personal screen share with you potentially, and we can take it from there. All right, that's it basically, everybody. Have a wonderful day's trading. Hopefully, as I said, that was useful, and I wish you all the best with your trading until hopefully next Tuesday. All the best, guys. Bye bye for now.